Good morning and welcome to today's pre-market video. Now in today's pre-market video, we'll take a look at the Bank Nifty Index and what option buyers can do with it and what option sellers can do with it. Apart from that, we'll take a look at the news which will be affecting our markets today. Now on the news front, I'm not going to bother with the international news. Today all the focus will be on the Reserve Bank of India. The governor will be speaking on whether he's going to be reducing or increasing rates or keeping it the same. Now, before I give my view on that, according to me, there's one thing that's going to be bugging the Reserve Bank of India in making a decision in this meeting. This year, the International Food Price Index has risen, and this is bad news for RBI. This is India relies heavily on imports, so rising prices are a major concern, and the index has risen by roughly 3%. This is the war in Israel and Iran has basically worsened the situation, as it has disrupted some of the global supply chain, which has caused a surge in commodity prices. Now, why this is going to affect this meeting is the RBI in the last meeting was hoping that global food prices would decline, which would ease food inflation pressures and allow for more lenient monetary policy stance. However, the recent developments suggest that this scenario is becoming less likely. The firming up of oil prices, currency depreciation, and ongoing geopolitical tensions in the Israel area are going to continue contributing to elevated inflationary pressures. So this is something the RBI which was hoping wouldn't happen, but it has exactly happened as they didn't want. So today's MPC meeting will be crucial in determining the RBI's natural future course of action and mostly what they talk about interest rates and inflation. This is as when we look at the global scenario right now, technically they should not decrease rates, but I believe we will be going in for a small rate decrease most likely. This is as the RBI governor has to do something due to most of the central banks in the world doing something. So I would find it a bit weird if he did not do it. So, but even though this is against the consensus, this is I think nearly 95% people believe that he will not be doing a rate cut. And yes, the data shows that he should not do a rate cut yet. But now it will be to see whether the governor follows the data or he tries to appease the other and follow the suit with other central banks. Now, how will this affect the Bank Nifty expiry? Now, according to me, if his stance on interest rates is basically positive that for the coming meetings he will be doing a rate reduction, and he sort of gives a hint at what kind of rate reduction we're going to get, then the indexes will take off. They'll go up pretty sharply. However, if he basically says nothing, he comes to the meeting, says rates are the same, and then says nothing of significance, then we can expect the markets to tank. But if it's a neutral stance, then don't expect it to go anywhere, just the box range to continue. So now, since we have talked everything about the RBI, let's take a look at the chart and see what it's showing. Now, according to me, as long as the Bank Nifty is between 51,800 and 5920, do not expect something big. This is a wide box range, and we can even see the price rejection we have seen in the past at these resistance levels. Why I'm saying at these resistance levels? Because me and clients have been using these resistance levels already, and we have had a very good time as we publicly caught the top, rode it to the bottom, and also caught the bottom if you look at the past videos. Now, according to me, as I said, as long as we're between 51,800 and 5920, we're not going to go anywhere on the upside, we're not going to go anywhere significant on the downside. With this range, option buyers can continue trying to trade both sides. However, I believe due to the range being so big, if you're an option buyer who is not quick on his toes, plus cannot take on a lot of risk, your risk appetite is low, then avoid trading this RBI event. This range is rather wide and it's generally already been very volatile. So you do not want to be going, let's say, up to this point and coming down to this point within, let's say, 3 minutes. If you're not good at day trading, plus you don't have a good risk appetite, this will wreck you and it will make your insides churn out. So as long as I said, as long as within this range, we are going to get dual-sided moves. However, if we break 51,800, then my main target is 52,200. This year 52,050 is a good resistance, but I think it will be blown through. This year will have broken a major resistance. So 52,200 will be my main target, and if we break that, then 52,480 to 52,550 is the next target. On the other hand, by chance we break 59.20, then 5700 is a strong support, but I believe if 59.20 goes, this time 5700 will go. This is as I think this time if 59.20 goes, it will be due to the RBI. So 5700 will be wiped out in a second, and we'll be going to 5400 and 5250 most likely. That will be a very good down move to catch. So according to me, as I said, option buying between those ranges is what I'm going to play. Now, like yesterday, for example, in my pre-market video, I said I'll be selling puts because of what it is showing most likely. I'll be selling puts initially and I will sell calls later depending on everything. Now, today is a similar scenario, but I'm not going to decide whether I'm going to sell puts or calls in this pre-market video in a clean manner. Why I say that is we do not know what the RBI government is going to be doing. So I'm going to leave all the decision to one thing, which is my trend catcher indicator. This is right now, if you look at the trend catcher indicator, it showed us that the base is forming as we basically, when we hit the bottom, we formed a bottom in it and we rose exactly as we have risen to base, and we have come to the zero line. We basically rose back to neutrality comfortably. So that has been a clean sign that we have. Now, what I'll be waiting to watch is we break this top, the trend catcher indicator has formed, the recent high, and the black and red line cross zero. If it does so, then I will end up selling puts more. And I will wait for the rise to go towards one of the resistance levels and sell calls. However, if I see the trend catcher indicator is staying flattish here and is starting to get rejection, then I'll sell more calls and I will wait for a fall and then sell puts at one of the key supports. So my trading plan is now going to be fully based on the indicator. I cannot say how I usually say that I'm going to sell calls and puts and I'm going to enter like this and I'm going to enter like that. Definitely, because the RBI event changes the game. So I'm going to base everything on my trend catcher indicator plus my price levels. Trend catcher indicator goes above zero, then I'll sell puts and then I'll wait for it to the index to rise to let's say 52,200 or 52,480 and sell calls there. On the other hand, if I see the trend catcher indicator cannot break this point and is coming back below zero constantly, then I will end up selling calls most likely above 51,800 even, and then wait for the drop to come, and I will sell puts when we either hit 5,700 or we hit 5,400 or 5,250. Most likely 5,700 and 5,400. So my whole game plan is going to be based on my trend catcher indicator plus the RBI. This is the RBI is going to decide how the trend catcher indicator sort of goes, but the trend catcher indicator is using the money flow. So where the money is flowing, we can see it immediately alerts us. So it will immediately alert us and we will go in that direction for this expiry. So that is my trading plan for the Bank Nifty. So everyone who is basically going to trade using the levels pays attention to everything and it should be good. So that's it for today's video. If you liked the video, hit the like button and subscribe to the channel and hit the notification bell too. Thank you.